Breakfast Club. My name's Darren Hancock, and this is ThetaWaveTrader, August the 11th, 2026. And let's have a look at the markets. What I'm looking at here is, looks like we've got some upside attempts to get up here, and we're getting some rejection. Right off this premium array and the hourly, I would like to see if this manages to drop back down into this little curiosity area I got right here. I'd like to see if we can get a retest of that first for 9 o'clock, get a swing here, and then send that higher. If we get the high, I want to see if 9 o'clock takes the highs out and then brings us back down into 10 o'clock, back into this level. So I want to see if this gets tagged either early or after that high. Either way, I'm targeting that or that. That's short. That's for the hourly side of things. 906. So just taking out these highs. 911. At 911. 920. And then there's a small SIBI up here yet. So you have some upside targets to reach for. But I'd like to see us give us a little test down here for 9 o'clock. I want to see 9 o'clock create a swing low here. We are in a tight little zone here on the 4 hour. Not even at 50% of that. We could see another drop. We have 9 o'clock. We drop through here and use this as support. I'm targeting the rejection block. These lows down below us here, the next rejection block. And, that discount 4 hour we were looking at yesterday, I finally picked that up yesterday. Now I want to see if this, if we can get through this level, then I'd be retargeting this 4 hour levels on the NASDAQ. And ES. Now see, this is interesting. We've got a retest going on here. So we can come down just a little bit more to 7784. You want to see a portion of this stay open and that continue to run up higher and take out these this old high here yesterday morning at 10 o'clock in the New York. So I want to see 9 o'clock create a little swing here. This 9 o'clock hour, create a little swing low, send it up higher. If we run up higher first and then take it lower, I want to see 9 o'clock here, reject off that quickly, like clean out the highs, reject off it quickly and start to take out these, this low at 7 and 8 o'clock and start to work back into this busy. Let's see if we can't get back down into the 777 level. We'll see how this 9 o'clock unfolds and then the open at 9:30. That'll kind of tip its hat for me on the direction it wants to go, because we're in a tight consolidation. So typically I'd want to see this take this out and send it lower. See how that midnight candle, midnight open? See how sensitive that area is all along there? Let me see this whole price now. We're back in the premium. Small little consolidation here. Let's see if we are. I'm just checking to see where we are. We're here live. Okay. Noah, good morning. Or good afternoon. Jean-Paul, hello, my friend. I know I've been missing in action. I heard you mention the channel yesterday, and I thought you meant Telegram, but I'm not able to find the channel. Yeah, that's the community channel we have. I've trimmed a whole bunch of people off of that lately. There's a lot of people in there that are just there to take trades. They don't really participate. So I've gone back through the list of people that are there, and a community is built on people that contribute and help each other out. And there are people there that just sit there and borrow other people's trades and don't participate and just keep taking. And so I'm just clearing that out. If you're going to join a community, you want to be part of it. You want to participate and learn. If you have questions, ask questions, learn, be active in your learning. You can't just sit back and figure you're going to learn it by observation only. You have to participate. So that's probably why our community has dropped. I've whittled out probably 2/3 of it just from people who are just sitting there in the background, either not participating, they haven't been there for months, or they just sit there and come in, collect whoever's doing trades and posting their trades. And there's some successful people in there that are doing some great stuff. And there are other people who are just sitting there copying their trades. So that's not what the community is about. It's about learning, about growing and helping each other out. If you don't participate, then, you know, go find another observation platform, because that's not what the community is about. Anyway, that's where that's from, at Jean-Paul. So, and it's, I used to have the invites up top there. Now it's not open. It's not an open forum anymore. It's by invite only. So I guess if you're in here participating, you get an invite, you pop in. It's a privilege type of thing. There's some people that are really helping out, contributing to other people's growth in there. And I think that's awesome. And I want to support them for that. And I don't want people in there just stealing their ideas and stealing trades. So that's not helping. That's just laziness from my concept, my perspective. But hey, it's my community. I'm one of the guys that did not participate. Sorry, I was buys buildings. Oh, that's fine. You know, I understand people have other priorities, right? And that's fair. That's fine. If you got other things you got to do, then you got to do what you got to do, right? There's no ill will or ill feelings there. It's just, I think it's only fair for those people who are contributing to have people that are there as well. We can't build a community on, you know, 5 people that are doing all the work and other people. And you're not alone. There was over 130 people I got rid of that were in there not doing anything or just sitting there. They had other things to do. So anyway, No, no offense. I don't take any offense to it, Jean-Paul. So it's all good. I totally get it. You got a life. You got things to do, right? But these guys are in there. Like I tell you, I go in. I'm in the mornings. They're in there in the morning, and they go till evening. Like when I'm going to bed, they're in there still chatting, still talking about charts, still talking about trades. These guys are super dedicated to it, so I totally respect that. So anyway, we're in this consolidation right now. That's why I'm kind of blathering away here. We're in this little tight, it's compressing. You see how it's just getting tighter and tighter and tighter here till we get a takeoff at 9:30. So we've got upside, downside, and then I've got a break. If I want to see it break through here, then I'm looking for further downside. And if we break this high and this premium on the hourly on a close and then support it, then I'm looking for higher prices for that. Let's look at oil. Oil never came back and gave me my trade, so I'm going to take that one off. I was looking for that to reach up here. This was yesterday. We wanted to see this hold price. If it broke like here, goes higher, wait for this high to get taken, come back, exit, retest it, send it higher, close below here. Then you say, I want to see it just retest this and come lower, and it doesn't. So if it breaks the midpoint of this, then look at the high of this BISI. If the BISI gets broken on the upside, then we're looking for that to continue going higher. So watch, see how it goes here, breaks it, comes back into it, takes the high, pay yourself at the high, and then move your stop loss to break even, because you want to see this hold price now and send it. You want to see it go ripping up there. As you see, it went into this consolidation right around the Asian market, which usually there's not a high volume amount of volume moving through Asia. So that's what you got there, sideways. And then we get into London. So we got the new midnight open. Takes out the consolidation here to the upside, comes back in, retests it, sends it higher. Late London, we have, was it 5 o'clock? Breaker takes this little high out, drops below it, comes back inside the breaker. I would like to have seen it just stick in half this wick or half this body here. Like this would have been a nice little entry. Your stop loss goes above. It breaks above this SIBI, so that's where you go, dodgy situation, pull your fib from low to high, and that's probably 70%, 60 to 62 to 70% of that small little pocket there. I'll just draw that out there. 70%, 75%, 75%, right on the money. Off from trade entry reversal. Watch it trade back through here. This becomes the no-go zone. I just repeat exactly the same thing I do every morning. So trades back through here. So now you're in this little consolidation, and you think, oh, this could be just bouncing around, making this little bull flag here, right? If it breaks below this low of this SIBI on a close, then I look to see it retest it. So we've opened below it, retested it, sent it lower. Look for this low to get taken. So we're looking for a Model 3. We want to see that take that out. It takes it out here. Model 4 is a retest of this half the wick body mean threshold of that candle all the way back into here. So Model 4 can come all the way in there, and then we take out its next low. So this one here, you want to see it come this one here, then when it finally takes this candle, you can see it come all the way back up into here. So your stop loss would have to sit that high for a continuation on Model 4. It just comes back, tags it, sends it lower. That's Model 4 continuation. Or Model 2 if you're looking at this larger range here. And I like to consider a range a one that has a SIBI and a BISI in it. Okay, and there's obviously nothing in this one. So it would have to be like this little BISI here, all the way down to this SIBI down here. That's the only one I can see. So for me, that would be the first big range I'd be aiming for. So if you're going from box here, right there, box to box, finally hits it here, trades through it, right through the bottom of it. So that's a model 2, take profit model 2 once you're entering into it. That's so you just kind of hunt all the way down the side here and look for that SIBI. And that would be the downside target if you're using a take profit model 2. So 9 o'clock, you want to see 9 o'clock take out these lows and then see if it starts to push back up higher again. I'd like to see us dig higher into this candle. Start getting back into the gap above you here. If we take out the mean threshold of this candle right here on a close, the hourly close or 4-hour closes on that and below it, then look for a retest of this SIBI below you here, which is quite a lot deeper run. Gold, if you're looking at gold, it's chopping away here. This 1 minute's not one to play in right now. Let's look at the 5. Right off an old no-go zone we had sitting there. This is chopping around so much, you'd have to just say, give me something with some stability. So this is chop. I don't trust anything that's chopping around that much. Wait for the bull trap to get closed out and wait for this BISI here and this market structure to break to the upside. So if you draw that out there, here to here, wait for it to close above it right here, retest it, send it higher, pay yourself at that high. Now the next one is this breaker. And this is the last up close candle. I know Michael uses all of them, but I like this last one as the defining factor for support. If it's strong, you should only need this top candle here. So you bounce off, you come back up, see how you tag it here and send it higher, pay yourself as soon as you get above into the rejection block here or that high, you pay yourself. And now if we get a reversal past here and it takes that candle out, then I'd be looking for a change in direction. Otherwise, continued support. Okay, so what we're doing here is we're breaking through that premium or that BISI here, coming back inside it, tagging it one more time right there, also filling this BISI, send it higher, pay yourself at the high or rejection block. Watch here, body doesn't break it, still going higher, pay yourself at the high. So right now you're still looking for seeing this go higher. I'm looking at this breaker that's sitting right here. So you're looking for half the wick. Half the wick's already been traded through. So look for a fill here at 44.60. Then you're looking for 44.64. Those would be the ones I'd be looking for right here. And if it breaks 44.64, you're looking for the bull trap to break. The next one. And there's a small little premium right up here. We have a no-go zone right here. Look at the no-go zone there. So kind of reactions you get. So watch this and this for market structure shift to the downside, and watch these key levels here and watch to see how they react off of them. Silver. That's a retest. I like that. This would be a nice little drop down. We'd see silver take a little run here to here. So you're targeting these lows. That high has to, you have to keep that open right there. And you want to see that keep coming lower. If you come back through this level right here on a close, then look for a retest of more than 50% of that range. I think you're already at 50% of this little range here. Nope, that'll be 50% right there. So you can see it bounce off of that and come back lower. So all the time you've got this candle, this SIBI here that's being supported, and this BISI is now traded below it. You've come back inside it. You want to see it keep coming lower now. Nothing else down here. So you want to see it aggressively pick up speed. And if this is a price leg, next price leg down should take out these lows. That's kind of like how I'm looking at that. And again, if it breaks back through here, look for support and then continue pushing up into that 50%, 62, 70, all the way up to that mean threshold of this candle right here. So that's kind of like the area you're working in right now for silver on the hourly. And those of you who are into Euro, your Forex market, the American dollar is continuing to climb higher. That should put downward pressure on the foreign currencies. Yesterday we saw the British pound was dominating the euro. Now it looks like the euro is finally getting some pushback. We've got a trade above the discount, and we have a discount established here. So I just turn that into a discount rate. Pull that out. There. See how the body's broken above it. Retest it. We're getting a deeper run into this range now. Pull your fib tool on this. Low to high. Look for 50%, 62%. Take profit model 1. We'll pay you on the way up. So if you entered in here, as soon as you hit 50%, move to break even, take a portion of your trade off. And you're working internal range of liquidity. You're looking for low-hanging fruit for euro pound combination. For euro dollar, that's a full fill of this already. If that doesn't break through the bull trap here, or this little premium sitting right here, this does not go above here and reverses and comes back down, watch to see if the pound has to be worse than this for euro to continue to stay up there. You got to break through here, find some support at this, and start breaking that high and get some market structure shift before heading for this next BISI above you. Otherwise, we do have some open area down here still. I'm going to put that on there just so we got something to look at. So if that holds, look for this. And pound, you have to wait for market structure shift. There's nothing really in here other than this breaker. You've come back, retested it. Its mean threshold is all I can see here. That is yet to be tagged. If you can get through that, come back, find support at that, push lower, then we'll look for a deeper run from here to here. Pull your fib tool on that, look for 50% or more. So that's where that's at. And some people like to trade the DAX. Let's look at the hourly on the DAX here. So you got equal highs above you. You want to see 9 o'clock take these out and bring it back down into here. So you see how we broke through this premium array here? We had a discount down here. We ran up through this discount and this other little tiny one right here on that one candle, but we did not take out the high yet. You wick down to the last one you took out, go higher. The body finally breaks this high. Look for the high to get retested, or that last up close candle. Always look to the candles to the left after a swing. The first candle to the left, that's the bull candle. Watch that one. So as soon as you break above it, come back and tag it. Look at that. Beautiful. And then finally run higher. So now I'm looking for this to take these highs out with the hourly. So the 9 o'clock candle, 9:10 should take out that high. That's DAX. Let's get over here. Consolidation still. So we're still waiting for another 8 minutes. I think price will chop till tomorrow. Small movements here and there, but mostly sluggish till tomorrow. Yeah, that could very much be the facts there, Jean-Paul. I agree. It doesn't look really strong on the hourly. The 4 hour looks choppy as well from NASDAQ perspective for sure. ES hourly looks, again, choppy, right? If we just get these highs taken, all I'm looking for is this 9 o'clock, 10 o'clock. Take out these highs, get back into this choppy zone again. I'd be all right for that because I'd be targeting down here. So if you get back up, break this and just get a small little look for any reversal on your 1 minute chart once these highs get taken. And then you're looking for a pullback into the system. So if I see it on a 1 minute and a 5 minute, a continuation back into this consolidation that you're anticipating, then you can start targeting first, second area. This one's been tagged, so this one hasn't. So I'd like to see it reach all the way back down into that 777 level once those highs are taken. That would be my slant on that. Good morning, Mr. Derek. How are you doing, buddy? The B Master D. So there is a tiny or small, depends on when you open this thing up here, you'll see there's this SIBI right here. It's what I like to call a no-go zone. So you look at it and you go, do we get a body trading through it? Nope. We get lots of wicks that keep trying to get through it. That little no-go zone is holding price back because we traded through it, or we created it, we traded into it. So it's a little fair value gap that just doesn't break. We keep coming in and hitting it, nailing it, but we get no bodies that break through it. And we keep raiding the liquidity that forms above it. But it's holding back price. So until we see a body break through here and start getting some support at that, it's the little ceiling that I see us constantly drilling on, trying to get back up there, and we can't. So I'm looking for this little guy down here as support, and I have to include that wick or that little tiny gap in there as well. So I use the close on this one and the open, or at the close on this one. That'd be where I'd be targeting for down here, but you got to wait for you a nice clean entry. So if you are going to be in a consolidation day today, Jean-Paul, you want to try and capitalize on the outside, working on the liquidity on the inside. So if you can see a run on a high, quickly look for your entry for another run back or displacement back into this consolidation again, or another raid on the liquidity on the opposite side of it. You want to be looking for entries on either side of that, either continuation entry or a reversal back into the range again. That'd be your safe bet instead of trying to find something in the middle and work your way out. What say you guys? Does that make sense? Is there logic to that or not for you? And I do like this this candle over here. I'm going to put this little that'd be a great place for it to run up to and then start coming back lower. Just a wick in there. And again, where does that body end on the hourly? So we still got another 32 minutes of this hour. And there's lots. See how this 1 minute is just holding lots of liquidity down here. There's a whole pool of it. It just keeps coming down right at that 8:30 candle, the open, and just keeps banging off of that. You got the midnight open sitting right above it, and you got that first presentation fair value gap above us here. This is the midnight open range extended. This is a premium array we've got from sitting back. Where the heck was this one? Way back in here. And there's another one sitting right up in there. So I've got one here and one here. That'll put us right into that Monday's range as well. So you can see how they're still banging on those. It's going to be a delicate day. If we've run this low here, you got a SIBI here, bull trap sitting right here. We've come into the mean threshold of the bull trap, and now we're rejecting off. We've broken above that SIBI. So retest the SIBI, send it up above the bull trap, get some leverage on that, and send it up into this old premium here. There's another little tiny one sitting right there. So I want to see it hit here, clear this out, find support, push higher. We are definitely compressing here. If there's another chart you want me to look at or asset class, just let me know. This is the open. Kaboom. So it looks like we're going to drop into this level here first. So I'm watching right here on the hourly to see what kind of reaction we get on that. To 779. And then you have 762. There's 764. Let's see if we can get this. There's 76. Oh, you're right through the mean threshold. So I'm looking at the mean threshold of that hourly candle. This one here. We're to the rejection block now. Now let's see if we get a snapback on that. Look for the mean threshold of this wick. And then we're hunting for that downside 4-hour area we talked about. You wanted to see this. I wanted to see that break. And then see if we close below here. Use this as support. And continue pushing down to the 10 o'clock. Unless we're rushing straight down there right now, that's fine. Then if we do have a consolidated day, we're looking for any sign of a reversal inside that 4-hour to catch a nice run higher. $32. So we should see a crazy Ivan here now. $32 to $38. Morning, Russell. No dice. It's a full run here. If we're not getting any pullback at 27 to 32 at least, then look for a continuation. There's the mean threshold right there. I'm going to keep running right into that 4 o'clock now, or that 4-hour. I'll look for this first presentation. So we have the 8:30 right here. $8:30 sitting right by the midnight open. Yesterday's 8:30. We're running right into that 4-hour. that we called for yesterday. We hit it late in the day yesterday, and then we're finally attacking it again today. Cleared out some more liquidity above the market. Attacking it again. Looking for, let's do the first presentation at 9:30. We'll see if this becomes the, right now this is the first fair value gap we're looking at. Wait and see where that one forms. So that's our first. Push down some more now. Let's get bigger, deeper dive into this 4 hour here. I was not paying attention in another meeting, but there are targets at 29,560. Well, you got your next target at 665. Then I would say 615 to 594. That's 38. Yeah, I've got this whole 4 hour block here, Jean-Paul. Let's see if this holds here now. And sends it back up. Inside this range. See if we can get above this first candle right here. Retest again. I want to see this first fair value gap hold price now. Let's see if we can get back into this range. Multiple tests on this SIBI. You want to see a portion of this stay open. Otherwise, if that closes in, it's not so good. Watch where that closes now. Still closes on there. Nope. Now if we close below here, I want to see this act as support and push lower. But watch, wait and see where it closes first. I'll let it run. There's the right in the consequent encroachment of that. Now I want to see if there's any sensitivity at this level. I always like the consequent encroachments because those you can tend to find some resistance and a rebound off of the outer limits, like the premium. You'll see these, so that premium level, there's some resistance at those consequent encroachments, and then it can just reverse and go straight back the other way. So here's the 4 hour right off the consequent encroachment. Now I want to see if that's going to give us a reaction off of here. So you'd want to see this break on the upside for that to go higher. So if that's not even going to pose any problem whatsoever, and we've got 12 minutes left of that last hour, and that's 9 o'clock. If 10 o'clock continues to push through here, then look for that 4 hour 574 level. The next macro, the 950 macro, is about to begin. It's out of here now. We'll see that roll over and keep coming lower now. We have to break through this or just retest it and go lower, or break it, find some support at it, come back inside this leg, 50%. And watch these key levels, and then 70% puts us right in the premium here. Keep your eye on that discount area there. We break through it, look for running back inside that range. There's 50%. Just scoop that and send it. See how we've run through that level and back inside here now. So I'm looking to see if that goes higher now. It does look messy, yeah. So if you want this to be clean, you want to see this, no more than 50% of this. And start climbing higher. We've got this SIBI broken to the upside. Come back and find support at it inside that bull candle. If it starts to chop through this again, wait for something cleaner. Your macro's already begun on the 950. Yeah, I can text and chat now. I'm looking at the volume imbalance inside the 4-hour. Yeah. I do like this consequent encroachment right now as a little bounce off area. I'd like to see us get back into here, or at least retest these lows here. And if we can break this structure here, then I'm definitely looking for this up here. But inside this range, you got the discount, you got the premium up here, and that first presentation fair value gap at 930. I'd like to see that go ripping all the way back through here and clear these equal highs out above us here now and start targeting this premium up top. That 900 level, that would be kind of crazy fun. To what degree do you see today as a setup for the next 2 days of major news events? Well, when you're in a consolidation like this, next, the news events, that's one of those seek and destroy. You got liquidity above, you got liquidity now it's being rated on the downside from the hourly perspective. But if you look at the 4-hour chart, this whole area's got lots of liquidity sitting in it, right? So we have that lower part of the 4-hour, that imbalance you see down here. So you've got liquidity above the market here, here, and you've got all this liquidity down here. So for that kind of stuff, news events, I'd be looking for raids on the liquidity on both sides of this. Otherwise, I don't see anything major taking off right now until we break through that candle's rejection block on a close. And then I want to see that mean threshold hold price and then send it higher for new highs. And or it's got to break this downside here, use this candle as support and push for the lows and start getting back into some deeper retracement stuff here. I'm glad I committed to this civvy here. Stop loss was sitting here. I'm looking, there's the premium. I'm going to pay a portion there. Take one off there. And then I'm going to let the rest ride. I want to see this market structure shift here now. I do like those 4-hour these consequent encroachments of the imbalances. Pay yourself at rejection block. We could be right into a consolidation here and you'll wish that you did. So what are you seeing there, Derek? I just don't want to trust any big runs right now, especially with those, like you say, there's 2 big news event days coming up. So you're just grabbing low hanging fruit here. So I want to see this now close above here. And look at that, open and closed right on it. It's got to keep going. Start digging up in here. See how we traded above the premium level right here? We came back, we retested it. That's a model 3 for range extension. That's extension. Now you want to see continuation, model 4. You want to see it come back. You want to see a body get above here. Come back and use this candle no more than its mean threshold to go higher and extend that past this candle. That's an extension. Or sorry, a continuation. if this one fails, we're looking for this back down here. And I don't want to see that. I want to see that candle hold now. I think I'm with you. It looks like they are just accumulating and engineering liquidity high and low. Yesterday's candles were a travesty. So ashamed of Monday's candles and side to side on an MQ. 1 hour is best for me to close my mouse. Yeah, agreed. Now I don't trust it. I'm going right there. My stop loss is sitting right here right now. I want to see this candle hold price now and send it higher. See, we've done our work. We've got above here. That's it. I'm sitting right here. That candle's got to hold price to keep pushing higher. This, hopefully this is going to act like a little propulsion and continue to push it up. Any trade I take will be 4 to 5 handles. Yeah, I'm keeping it super tight now because this could turn on us at any point. I'm just kind of targeting that area I had for you on the 1 hour up here. I'm just targeting this right now, so I'm just looking for just a little higher, get into the SIBI here. See, we're already eating through the mean threshold of this candle once, twice already. Just tap this thing and go already. Now I want to see 10 o'clock. This 10 o'clock candle, take out 9 o'clock's candle. I want to see it run right through here and take this out. And look for 11, 12 to take out the new highs. So this would be the low of New York is what I'm expecting to see here now. Now keep in mind this is back here, hasn't been revisited yet. So we're way up inside the range here. So if you haven't paid yourself along the way in terms of low-hanging fruit, watch for the optimum trade entry reversal right at 70%. I'm going to sell one more there. I'm going to take some profit right there at 70% and let the rest ride. I'm going to move my stop now to here. If that comes back against me, I've already paid myself at here. And then I didn't pay myself there. I just let it ride, hit 70%, took one off there, and the rest is sitting down here. So if this is aggressive now, I want to see this 10 o'clock candle really, we're inside that level I wanted to see. That's my no-go zone on the hourly. So if we bounce off that, see the consequent encroachment, happens to line up with 70% optimum trade entry reversal. So if that holds and we continue to come back lower, then I'm looking for this to give way and then hunt for that. Otherwise, I want to see that punch right through here. Just keep pushing. Not a single 15-minute candle below 29,717. 29,717 on a 15-minute, you say? Oh yeah, there's a right there. We've already busted through the 15-minute no-go zone, Jean-Paul. And I know you may not be into my go no-go zones, but I look at this area right here. There to there. That's a 15-minute no-go. If this 15-minute candle closes above here now, it's 15 go no-go. So we're right back up into that hourly area. We're bouncing off the first presentation fair value gap on Friday. That was the 9:30 open. I always like to keep Fridays on there, especially in the first 3 days of the new week. And then by the end of this week, I'll get rid of Friday and all of this week and just hold on to this Friday's candle. So that's what you're looking at there, Jean-Paul, for that to hold. Come back, hold price here, leave the rest of this open. You can wick into that. That's less desirable, but I want to see it just come back in, use this as the no-go zone to support that price and keep pushing higher. And we're looking for 10 o'clock to take out this high. So here's our upcoming breaker right here. The lows are important as well. What I see is a failure to close below the intermediate low with a sweep. So we see here in this area what price will do. Yes. This was a really good example of time and price. So that consequent encroachment of the 4-hour right at the time, if you look at my Tibbs video, you'll see why this is an important level and why time and price were so crucial. And then look for that opening for the long confirmation. That's what you hunt for. Higher time frame hits an objective, lower time frame on the time we're looking for in the Tibbs, looking for that specific reversal pattern to occur, and then take it. So remember, we were talking about, we wanted to see that go higher and then come back into this, and it didn't. It went straight down lower. You think, okay, so what's the downside objectives? If these are the immediate ones, what's the lowest one or the next lowest one, so on and so forth, until I see price say, look, 9 and 10 o'clock want to set the lower, the high of the day, then start hunting for it. Look for your opportunity to catch your reversal, and then wait for the setup. That's the setup right there. Body above, comes back in, does drop below it, but stop loss is down here. If you trust it, comes back up one more time, breaks through the up candle, or this the breaker right here, takes out its own high, trades back into the midpoint of it, or the mean threshold of that candle. That was my lits right there. Literally came back to the lits. There's a lot in the midpoint of this. My stop loss was sitting here, and I thought, oh, am I going to take a hit? That's got to be my line in the sand, and it literally bounced off of it. I'm like, oh, good. If you can make it back through here and take this candle out, that'd be awesome. Come back, use it as support. Then I thought, okay, good. Now we're on the right track. So that literally took me down to my fail safe. Always keep in mind, this one here hasn't been used. That's been tagged. That's good. Keep going. You got to be aggressive. This whole waffle stuff going on here, right at that 75% range now. What's that sitting at? Yeah, 75% right on the money. So all of this is optimum trade entry reversal territory from 62 to 79. All of this can have a reversal back down into here. That's why my stop loss is tight. I guess I can go down to saw that M and Q heading to the 1 hour inversion fair value gap. So made a small buy, and once it took this 29,784 spot, they got out. Good move, man. Good move. I'm out. That's the mean threshold. That's the lits for me. I don't want to see that get broken to the downside. So it just came down, tagged it, took me out. So if this goes back through here again, then I'll wait for this 780, 784 area here to break. Otherwise, look for down here now. And then if you see this and you see another reversal going on here for another run higher, that's cool too. If we break this and break that on the downside, this becomes the no-go zone. Then I'm looking for another attack on this 4 hour. ISOMQ, that is what I meant about we'll see here, price is falling to get inside the 1 month SIBI. 1 month SIBI. See how we came back into that, Jean-Paul, on that 15-minute? Look at that, right back into that perfect little no-go zone. Break through it, come back, fully fill it, and send it higher again. And getting a nice bounce off that now. Should have my stop loss sitting just below it. Oh, yeah, there's the 1 minute. Yeah, it's a small M. The big M is a monthly number, but that's okay. Okay, so wait till you see this candle right here. I want to see it just come back right there and tag it, and I'll start going back up again. Good. Now I'll clear this candle out right here. Come on, keep coming higher. That's a nice little spot right there. There's a small imbalance. You see it sitting right there? The volume imbalance. And the mean threshold. That's your line in the sand right there. And you don't want to see this constant revisiting it too. That's not a good sign. You want to see it tap it and leave. So forget that idea of going higher. Watch a retest of this area here. Come lower. And now we're getting back into looking at this guy down here now. Retest here, here. Keep coming. See that mean threshold of this candle? If that holds price and we pop back through here and take this candle out, we're going higher again. This is the next, for me, this would be the next price leg higher. But I want to see this mean threshold give way on the downside, and then I want to see us reattack this, and then I want to see if we run higher again. I've explained this in the community a few times about how these areas that don't get initially tested and we run through them. We like to come back and grab them up before sending it higher. So we'll see if this mean threshold, let's go here. That's the SIBI. See if I go 1 here and I go capital M, it goes to the monthly. There you go, Jean-Paul. 1 little m, sorry, 1 little m. Sorry, it gives you capital. Anyway, just leave it at 1 and you'll see minute. If you put a capital, you'll see month. Ignore that. Now watch this no-go zone here. See, we ran back up into the area we wanted to see, right, and filled it perfectly. And now you want to see this no-go zone break on the downside. Use it as support and then rip it through. And see if with this next big ground and pounder takes her down. Or we still, I don't like the fact that we've wicked through and filled this up now. I didn't really quite fill it. But let's see what happens here. That's a full fill now. This candle is still holding. I'm going to put my line right here. I want you to kind of look at this line. See how that holds price. What else is going on over here? What's happening in ES? Chopping away, just like you said, Jean-Paul. Chopping back and forth. Stay in at the, make your entries in at the lows of the consolidation or the highs of the consolidation if you're thinking about getting back into that range, and take the low hanging fruit, 50% of the run, whatever the high is, take 50% of the run back into the middle of the range, into the consequent encroachment or the midpoint, the mean threshold of the range, and then wait for the extreme to get taken, look for an entry, and then trade back into that 50% again. That's low hanging fruit hunt inside a consolidation. It may not be your cup of tea. If it isn't, walk away. Walk away, my friends, walk away. So here's the 5 minute. We have a change or a swing. We run above the first candle to the left, which is the bull candle. We trade back into the bull candle. Now you want to see this accelerate, and you don't want to see more than this mean threshold right here get broken to the downside. So you want to see that go up from there. If you pull your fib tool from low to high, high to low, %70 optimum trade entry right on the button. You guys see that? Right on the button. 70% optimum trade entry reversal. On the Beezer. Fib tools, gotta love them. Now it's into Chopville. I'd stay out of this. You're in the middle of this range again, so this is where you can get beat up on both sides of it, right? So you want to see this continue going higher. Accelerate through here. But you're in the middle of the range now, so if you've traded back into the middle of the range, take your optimum low-hanging fruit. You got lots of liquidity sitting down here. Yeah. What is oil? Look at that. Was this one of the errors we were talking about this morning? Retest. Take out that low. Retest that low. Went lower. Take out this low. On a close, retest it. Send it lower. Trade back into the no-go zone right there. Send it lower. Back through here. Now you want to see it come back and retest it and go lower. And see how it went through it? So now you're going to say, now I'm going to see this hold price, and I want to see this premium and this candle get broken to the upside. See I got the SIBI-BISI overlap. So if the BISI gets traded through right here, and this SIBI gets traded through right there, then they come back into the SIBI and the BISI and then traded higher. We wicked through it, but the bodies are respecting it, sends it higher. change in direction. As soon as we get a body through here, body gets through it, takes out this breaker. You typically want to see it trade back to the breaker and then go lower. Here's the no-go zone. We're inside the no-go zone. We just broke above it here. Tap it. Now you expect to see that to come higher. This swing point, there's your change in direction. Body goes above it. We don't even get a chance to retap it, so you wait for your next candle. It closes above this high, come back, tags it perfectly, sends it higher inside this range. You're going to go from Model 2 to Premium here. So there's your P1, P2. And if you can get through that mean threshold of that, there's another little premium right up in here. If you can get through that, use this candle as support along with the mean threshold of that candle. Start hunting higher. When we talked about this one, we see a body break through here. Come back, use this as support. It does. Takes the high, pay yourself. Keep paying yourself. And you wait for a break in the downside. So here's your BISI. There's nothing else up in here. Oh, there's one right there. Little tiny guy right there. Body breaks through it. Come back inside it. Send it lower. If you're waiting for something more significant, more dramatic, wait for this one. You trade through it, trade back into it, send it lower. You want to see a market structure shift, wait for one of these guys to break on the downside. It does here, trades back into it, sends it lower, takes the lows, pay yourself. Comes back into that breaker candle we're looking at. You don't want to see its mean threshold get broken on the downside. It's right here. So now you want to see that come back through here and start targeting these little areas we had above us here. If this holds and we roll over and come lower, this should give way and we'll start targeting for this SIBI. If that SIBI breaks, look for it to become the no-go zone and look for a further rundown below this liquidity here. That's what I'd be looking for in that. What did our SIBI do? We didn't have anything marked. We're still sitting between these two. That did not get above here. We traded back up into this guy here. Rejection block, and now we're still sitting below it. Choppy. Everybody's waiting on this big news events today in the next couple of days. Good morning, Hans. How are you? All right, there's a retest. Take this candle out on the upside, and then we use this candle as support to keep going higher. Unless we're consolidating again. The only upside I see is right here. Let me just put the two areas I'm still seeing us stuck on. So right there. And right there. Those two, one of those two got a break with a bold candle. A bold candle close, please. There's the retest of the SIBI again. First candle to the left of the swing. Keep your eyes on that candle. retesting a SIBI again. And this is all I'm looking for inside this consolidation right now. Not that you're expecting any big dramatic breakouts, but I'm looking at this as a support level right here. Traded through it. Now I want to see it get used as support to eat through the mean threshold of that candle. See how the bodies are respecting it. We've hit the rejection block. Now I want to see it pop through here. Close above this with a big bold candle. Ideally a nice little fair value gap forming above here. Institutional order flow entry drill. Our what I call a graded response is with the fair value gap above. Graded response. Your A plus trade, A, B, C, and a D is a full fill of whatever fair value gap comes up here. So you almost have to anticipate what you want to see form. If it doesn't form that, then your setup's not there. Or my setup's not there. That's how I'm looking at it anyway. So we're just waiting for this to break and see what kind of a pop we get out of here. Well, I'm going to go chat with my girls, the bees, and head into the pro shop today. To close shift today. Ooh, that's a nice, that's I guess it's till sun goes down, right? People don't golf in the dark. Unless you got some heavy duty lights going on there. Anyway, I wish you all the best. Derek, have a great day. I hope it's a nice sunny day for you. We got rain here for the next week, I think, which is good because we need it. Now you see how we've traded back through this candle? Consolidation. This is the chop. See that mean threshold, how it held price? It did not get us above there. We wanted to see this hold. It did not. So now we want to see this act like an inversion or a no-go zone now. You want to see it tag it and go lower. Now we're back on the horse. The horse is spun around on us and sending us back down. So if you try to buy into that and say it's going to go long, it doesn't, because it does not break the level that we're looking for. My rule anyway, did not break that high. So it's not that we're calling it wrong. It's saying that's the support level right there and here. Rolls over, takes this. So now if we see this pop up in here one more time, then roll over, you want to see this low get taken and that candle act as support. So you want to see it's low, it's close, it's mean threshold, also that no-go zone to continue going lower. And if it pops back through it again, you want to see it because there's no BISI in here, no upside premium and downside discount. It's all in one area, because if you take that high to this low, you'll probably find that the premium and discount levels are sitting inside that SIBI. And what I mean by that is I'll show you. If you're looking at this small little leg that we're in right here, the small little high and low swing point, see where the 50% is? It sits right here. That's the premium portion, and the discount portion is really tiny in here. So watch to see it pop up into here and then roll over and keep coming lower. And if we get a body through here, if we get a body that closes below here, look for a tag or up to here. So all of this is fair game right here. And there's the little tag of the no-go zone. Roll over and come lower. That's how you kind of practice watching the charts. Don't think that this isn't a great opportunity to practice your charts, because you may be like, oh, I'm bored. This is it's just chopping around in here. This is great to study. When you get consolidation, it really makes you zoom in on your levels and really look for support, resistance, and then you're studying it and saying, this is what I want it to do. So we said we wanted to see it trade back into here. It did right there. Now I want to see it go lower. Not that you would trade this, you're just looking for, and when you're in consolidation, don't trade it, just kind of practice. Practice makes all the difference, my friends. Like to see price push up and take these relative equal highs, then dump. But when you're looking at price right now, Russell, stay in what you want to see and what's presently being presented to you are two different things. If you hold on to that idea, if you want to see it go higher, you'll overlook these little areas where it's turning on you. So say you want to see those highs when this breaks to the upside, find support, then I want to see relative equal highs get taken. Otherwise, right now, I'm not going to see my relative equal highs. And if it rips right through and gets them, you're going to validate the idea that what you wanted without proof that you're going to get that. Suddenly you got it, and you're going to overlook these little points that we're expecting price to continue pushing lower. You know what I'm saying? If you skip data points and you go to, I want to see this, and eventually it gets back up there because the proof provided it to you down here. Like we see this swing here, create a fair value gap, come above it, tag it, use this as the new bull trap, find support, breaks the no-go zone, and then takes the high. And you go, oh, I was waiting. It took me a long time to get my relative equal highs, but you didn't see the turn. You didn't recognize very early what the turn was. So stay focused on what you want. I fully appreciate you want to see the highs get taken out, but stay on the horse. Otherwise, you'll start to overlook. It'll be like, I hope to see it, instead of saying, my proof is if this breaks, then I want to see the highs get taken. Like, just stay on the horse. Keep analyzing the snot out of this, Russell. You're getting much, much better at this. You know, you think about where you've come from since we met in Toronto, right? It's been phenomenal, right? So now this little low's been taken. Exactly what we're asking for. Trade back into this and then take the low. Now I want to see it take this low. If you're actually going to use the rule of pay yourself and take that, as soon as it takes the next low, that's the one you pay yourself at. It just took it right there. So you pay yourself, move to break even. Now you don't want to see that come back here again. You want to see it run straight through here. That's why stops are tight, because it's done what you expect it to do. And now I want to see the lows get taken. And there's that mean threshold again. So am I going to bump up against resistance? Yeah. If it doesn't and it starts to run back higher, then I want to see this act like a bull trap taken. I hope this makes sense to you, man. I'm not picking on you. You know me. A lot of love, man. Nothing but love. No judgment. There you go. Taken now. Done. You've traded from an area that you see. That's my objective. I wanted to see get taken. It got taken. That broke, but it hasn't broken with a body yet. So now I go, that was the target. Hit it. No different than if that was a daily chart in a consolidation and you saw that. You'd say, now I'm going to hunt for hourly, and I'm going to hunt for 15-minute reversal that occurred right there at that specific area. I'm expecting to see resistance. If I don't see that and it keeps going higher, then I go, great. If it breaks through that and comes back and retags it, then I'm going to go for those equal highs. Now the lows have been taken. Now what you want to see, Russell, is you want to see this little cluster of bull candles and that SIBI get broken to the upside, find support, and have a wick down into this high, this candle, and then send it through the midpoint of this again and get on top of these candles. But there's a bunch of data points inside here you have to acknowledge as well. Yeah, since we're in a consolidation, that has to be considered as well. Not a good place to enter long for now. The Toronto Trade Summit. That was fun. We have to have another summit soon. We all have to have a big meetup somewhere. Good times. That is enough for me. I saw what I expected. The price is on hold till CPI. Have a good day. Be safe. Take care, Jean Paul. Good to see you, man. See how we're getting that change now, Russell? Watch this level right here. And see how we got overlapping ones now? We got this guy right here and this guy right here. Now you can look at these little relative equal highs, or you're looking up relative equal highs up here, because there's a bunch of data points before we get through that. We got to see support out of here. So we got to see a solid candle, fair value gap, graded response, A or B, no more than B, and smash it through the premium array, then get my level, my model 3, then my model 4 for an extension. If you like what we're doing, hit the thumbs up. It all helps. I appreciate it. The like button. See how we're now trading right on the body. So now we've got 1, 2, 3. I've got 3 overlapping SIBIs now. Came back, tag, keep coming higher now. See if we get through this. This is the premium array. Why is it the premium array? Inside this consolidation, it's the highest imbalance in the consolidation. So we just popped above these highs here. Body closes above that candle. Tag it. Hit that premium. Right on the money. Now I want to see it close above that and through it. And if it doesn't, it just hit the premium again. You're on the outside of the consolidation. Is there a likelihood it can just roll back into the middle of the consolidation again? Why not? It's hit the premium now, has not closed through it, and has not traded a body above the high yet. This is a nice little retest here. This, we'll see if this Tuesday 6 a.m. candle holds price and sends us back higher again. That's a 50 candle. So let's see if that holds. On the 5 minute has a body above set of up close candles for 10 a.m. Well, I do like the fact that this NQ's got this SIBI is untested. This bull trap, we've ran through it, and the bull trap, the wick is holding. We haven't even got back into the body yet, and the wick is holding, and it's sending it higher. So this first little fair value, or first BISI above the little swing point here, that's even holding. So it's saying, hey man, we can go higher. Send it up. Keep punching. I like it. I like it. I like it. Come back. You can retest these little highs right here. A nice little tap and go would be great. Right there. Tap and go. Last up close candle. Mean threshold right there. Right there. Send it up. You don't want to see it start trade back through here. Thank you. I got right in off that. I'm at break even plus the cost of the trade because I don't want to see it come back down here. And because it's been chopping around so much here, this could just come back and take me out. So I'm at the cost of the trade. I've paid for the trade and just let it run now. See if it goes. And I'm going to pull that sucker right up there. See if we can get a body above here now and use this candle as a propulsion, act as a propulsion candle. Not yet. It is valid. 50%, its mean threshold. You don't want to see it break below here. You want to see that keep pushing higher. Okay. Well, it looks like it's chopping around here, my friends. I think that's going to be it for me today as well. See the 4-hour, hourly. I just see it chopping around here. We might have some more up play here on the 5-minute. Start getting above these equal highs. At least target this no-go zone up here at 834. And target that midnight open for today. Let's see if we can get a bounce off of this premium area again. And use that to launch ourselves up. There's the pop. Now you want to see it start driving up higher now. And then you target the midnight open. It starts to take out that candle on the downside and it closes below here. Then we're going to change in direction. You got to get back on the horse again because it's turning on you. I know you got choppy wicks, which is, you know, the kind of defense move you have to make for 11 o'clock. We're getting into 11 o'clock now. So unless 11 and 12 starts pushing you higher, we could get a revisit of this guy down here again. You're still inside that large range. We haven't hit the premium yet. So if we do get a run to the premium and you get a reversal with some support, look for a run back down into here. All right, well, that's going to be it for me this morning. I'm going to take my little bit of profits and I'm going to move to the sidelines. And I will see you guys early tomorrow. Thanks for tuning in. Thumbs up, like, subscribe, you know, all that stuff. And I'll see you guys tomorrow. Send the love as usual. Take care. And the rest of you I'll see on the community there if you're in it. All right. And I'll talk to you guys tomorrow.